Hello and welcome. This is a very special episode of a new series we are starting off on ET Now, The Wealth Creators. Wealth Creators is a show where we try to showcase high growth companies. What is the growth DNA of that company? Who are the managers behind it? What are the factors of growth and how are these managers pressing those levers to ensure value creation for all their stakeholders? Today, the company in question is KFIN Tech. I am at the KFIN Tech headquarters in Mumbai in conversation with MD and CEO of KFIN Tech, Sreekanth Nadella. Sreekanth, good to have you on the show today.
Thank you, Ajay.
So clearly, we are making headlines these days on the National Stock Exchange, on the Bombay Stock Exchange, even mutual fund folios booming everywhere. Millions of transactions are getting executed and volumes are booming, and you have a very big role to play behind the scenes. So fund transaction and fund administration is a very huge job actually. Technology plays a big role in scale. India, of course, is achieving scale, but can you give us some examples of size and scale global companies of fund administration industry are actually clocking right now? And what is the kind of visibility we have that Indian companies also will join that league?
Great question, and that's a very sweet spot for where KFIN Tech wants to be. So, global. Let's start with top down, right? The total global assets under management is broadly around $90 to $100 trillion across the globe. The financial assets I'm speaking about, that will cut across mutual funds and alternatives, so on and so forth. The fund administration business, which basically takes care of the management of those assets, which are managed by the fund manager, is roughly a $25 billion industry today. I'm talking about the revenue of the companies which are in the fund administration space. 10 broad companies, international companies today generate about 80% of the total revenue of the $25 billion. Prominent amongst them would be Bonnie Mellon, JP Morgan, Citco, SS&C, so on and so forth. And there are several unlisted companies as well in that space. The share of revenue of any Indian company in that space is practically nil at this point in time. Cognizant of the fact that the opportunity is that of $25 to $30 billion in terms of revenue pie, and the fact that we are here and then we are growing much faster than most of our global peers, combined with the frugal engineering that we bring to the table, combined with the prowess of phenomenal amount of talent that we have in this country, we firmly believe that it is time for an Indian company to be amongst that global leadership, and that is something that is imminently possible. Let me give you a few statistics. A typical ticket size in India today for a mutual fund could be anywhere, it's about 20,000 if you average it out. Compare that to a typical investor in the case of US, it would be 15 to 20 times of it. So if you see the value of the processing of the transactions, it is sizably higher when you look into the US and European markets. In India, it is sizably lower, but the volume of transactions is nearly 7 to 8 times. So what we have managed to do is create the technology and the operational efficiency where we can process millions of transactions at a fraction of cost compared to what many of the global fund administrators are able to do. So for us, that is the sweet spot where we believe that we can add significant value to the global fund managers.
So that is why when I listened to your commentary in the previous, some of your result con calls, etc., it appears to me, and tell me if I'm wrong and if you can build upon that, from when you started off a couple of years back, when you joined, say 5, 6 years back, global piece in your India business was negligible. Now we are seeing it's nudging 10%. You have an eye on the globe as well. And you have acquired some companies and trying to build that piece further. In the next 3 to 5 year period, where would KFIN Tech like to see the global piece in overall business?
Great question. I'll just quickly go back to the genesis of it. One, of course, there is the opportunity, and hence, we should always chase it. We should always be in an addressable market, which is quite substantial. But at the same time, one of the other reasons why we ventured into global is to de-risk. Now, as a professional entity, it is our duty and responsibility to de-risk. Now, we always believed and continue to believe that mutual funds and India is a phenomenal story for the next bunch of decades. That said, this is financial services industry nevertheless, and we will always hit the cyclicalities associated with that. There can be market turbulence which can impact businesses like us. So for us, it's a huge amount of risk mitigation strategy as well as we cut across multiple other asset classes and into multiple geographies. We have, in 2018, acquired the transfer agency arm of fund administrator in Malaysia, and that is how the sojourn of international business started. And with that acquisition, we got 2 clients and negligible amount of revenue. From that, today, we scale it up to roughly about 10% of my total revenue pool, which is almost $10 million of revenue comes from my international business today, right? And this had been growing, obviously on a 5-year basis, $0 to $10 million. It is not percentages. You're really talking about growing in multiples, and that is how a young business such as this should. The addressable market of Asia, where we are currently present, is roughly about $9 trillion, of which major chunk is in Singapore. The rest of all markets together is probably about $1 trillion. We have just taken baby steps to start Singapore.
Okay.
We have created a first office platform called Exalt, and we're moving to Singapore soon enough. So we expect to have a profoundly differentiated growth pattern in the coming years in Asia alone, let alone starting Europe and US, which is truly our calling into the next year or 2 as we move on.
So can one assume that, say, 30-40% of your overall revenue in the next 5-year period can come from overseas business? Can that be scaled up to that level from 10% right now?
Our goal is that. 4 years back, our revenue profile was almost 85-90% was mutual funds, 10% was corporate registry, which is basically the equity and the bond markets. Yeah. We have created purposefully a pool of almost 25% revenue, which is beyond our traditional businesses of mutual funds and corporate registry. We believe, and our goal is to reduce the dependency on just the mutual funds driven revenue through RTA to about 60%, which effectively means that we need to orchestrate another 20% of the total revenue pool to come from international. Short answer to your question, yes, I do expect over the next 3 to 5 years that our total international revenue to have been around 30% of the total
30%.
business.
Okay. Will that also come at better yields, better profitability than India business, and hence will cushion or at least aid India yields in profitability?
I would expect so, Ajay, and I'll draw your attention to the hard facts as they stand today. Today, the mutual fund business in India is, they're about 3.5 to 4 basis points of blended yield is, what we derive, and internationally today we are around 5.4 basis points. So it marks a very distinctive 40% plus higher yield that we're able to derive in that part of the market. Again, bear in mind that the international fund administrators, for a like-to-like AUM, they draw anywhere between 8 to 15 basis points. So the gap that we have is quite substantive in terms of our approach to get to where the rest of the fund administration space is, which effectively means that we have the potential to nearly double the yield for an international business without doing a whole lot of different items in that space. And combined with the fact that it can be a hugely profitable business for the very simple reason that for pound to pound, same amount of AUM, if I were to get in India versus if I were to get in, say, Singapore or US, the quantum of transactions would be a fraction of the transactions you'll have to process, if you were to otherwise do it in India, which translates to fewer headcount, little amount, lesser technology, and hence a higher margin profile. So we do expect that over a period of time, the international business should kind of create a higher margin profile into the overall company.
Sreekanth, I must congratulate you and your team. If one looks at your numbers, you're a 30% kind of a growth company, 25-30% profit growth and revenue growth in the same vicinity. Talk about yearly numbers. You're doubling your numbers every 3.5-4 years so far, and the margin profile is around 40-45%. Can you talk a little bit more about that? This growth, do you have visibility on this nature of growth next 3 to 5 years as well? What are the levers which you have, which you can press on profitability front? Like you have diversified your revenue mix, going toward higher margin products, and did not stick to only one category of services, but you got fund management, RTA, and across asset class, all of that. Talk to me about strategy to improve the operating metrics over the next 3 to 5 years.
Well, certainly, Ajay. Very, very core to what we do, and especially in a business where the quantum of transactions significantly supersede the value of the transactions. It is the stated intent of, including our regulator, to reduce the ticket size. For example, 100 rupees SIP is around the corner.
Sure.
And that is to drive the financial inclusion in the country, which effectively means that the value of the assets will not grow in the same proportion as the number of transactions and hence the volumes. it becomes imperative for intermediaries such as us to create very nimble and highly cost-effective solutions to be able to make such a product even meaningfully profitable for the fund manager themselves.
Sure.
So we've been investing significantly on technology over the last 6 odd years, and one of the 3 pillars of the transformation that we were looking when General Atlantic Partners came on board, and fortunately I had the job at that point in time, was one of that was to drive technological transformation. And we were the first of the stable to have taken a cloud strategy, and today I can proudly tell you that all of our data and all of our API infrastructure is on the cloud, even as we are moving our entire application stack to cloud as well. So operating efficiencies will come from massive amount of technological transformation from legacy and taking away and dismantling the monolithical structures into more microservices architecture, point number 1.
Okay.
2, the residuary, and we firmly believe in the philosophy that, look, if there is a certain amount of human beings doing a certain operations work, it is happening because the technology has still not solved for it.
Sure.
So we look at almost everything from a paradigm shifting, opportunity to see, can this be completely automated? And, a lot of those things are in the direction. Second, in terms of the manpower itself, we believe that the era of going to high-cost locations and expecting the talent to come to where we are. For example, we are headquartered in Hyderabad, we got a headquarter in Mumbai. Those days are gone. Thanks to COVID, the advent of flexible work environment, people want to where they want to be there. So we have changed course. So we now basically follow the philosophy of go to the locations where there is talent, don't ask them to come to you. Ergo, we now have a center of excellence for data and analytics in Bhubaneswar.
In Vijayawada also?
In Vijayawada also with one of the universities. We are starting one in Maharashtra, we are starting one in Gujarat. So the idea is to have a hyper-local workforce and young energetic workforce, which reduces our cost to serve in operations and the technology. Together, I think.
So one is reduce the manpower and technology. Technology, of course, you're investing quite a lot on, and I was looking at over 20% of is now actually IT spends, right?
Yes.
And it has an upward bias.
Yes.
Tell us how strategic it is to spend on high quality technology so that you can actually achieve much bigger transactions at higher speed and efficiency.
I would look at the significance and importance. One is what value it can add. I would even question that the existence of entities such as ours will be under question if we do not go on to overinvest.
Okay.
The quantum of transaction volume increase has been so significant, has so substantial, that we need to invest at least 2 or 3 years in advance anticipating the volumes. Let me give you an example. One of the requirement of our regulator is that I maintain 2x the compute capacity of the peak load volumes we have seen in the last 12 months. So what you're really looking at is that even the regulator realizes that, look, you expect the volumes to be doubling and tripling, and at that point in time, I can't be scurrying around to invest on infrastructure. So there is a base case of infrastructure expansion that we need to do, just to make sure that our sustainability and supportive of the growth.
Sure.
Second, and more importantly, is the adoption of the technologies, which has become fairly cliche to say that I'm using Gen AI and so on and so forth. But we genuinely have been building our assets one after the other in the industry to be able to support. For example, we built the first fully integrated PIT-regulated platform called Guardian for insider trading management. We have created solutions for IPOs which do not exist before. We created solutions for distributors, to make their life a lot more easy instead of running around the branches to submit applications.
So talking specifics, do you think you have higher capability of taking margins, higher even from current levels, or even at a rising base, you would like to see it 40-45%?
I think capability is there, but we do not see the merit in doing that, Ajay.
So they may sustain at 45% for next 3 to 5 years.
So.
What kind of growth are we talking about on top line, and what all steps are you doing to achieve it? Just volume growth, or product growth, geography growth? What's the strategy there?
So our strategy had been, as I said, kind of break it down into brass tacks in terms of numbers again. We expect the non-core, I wouldn't say non-core, but then the non-mature businesses of mutual funds and corporate register, which are my more mature businesses. The rest of the businesses, which is one, international, alternatives, fund accounting, which is a business line for all of these asset classes, wealth management, and technology solutions. These businesses were practically more or less negligible on my P&L 5 years back. Today, together, they contribute to 25% of my total revenue pool. They've been growing on 50 to 60%, per annum. We expect the younger businesses to continue to provide, a pretty solid streak of growth. Even as the mature businesses also can give you anywhere between 15 to 20 or even 22% in terms of growth. So together,
so blended.
So the blended is what we are looking at, 100%.
20-25% mature businesses, young business 50% growth. So 30-35% blended growth visibility exists.
That would be an optimistic scenario. I would expect the mature businesses to be in the range of 17 to 20%, maybe more ballpark. That's basically as a symbiotic relationship we have with the mutual fund business. I believe the industry might grow around that percentage.
Sreekanth, we spoke about the growth strategy. Also tell us the profitability strategy, apart from taking the cost lower, because people is one big part of your business, the entire cost. And you're going hyper-local, getting best minds in their regions, not asking them to come to high-cost locations like Mumbai, etc. What are the other strategies you may have to improve profitability going forward as the business grows?
Biggest of those is to be able to do straight through automation, right? I think while the infrastructure costs for fast and hyperscale computing are important, what is important is to be able to automate every last leg of your process. Out there you would hear words such as, the RTAs are not digital, or we want to create a first digital RTA, etc., so on and so forth. Let me give you some statistics here. 99.6% of our transactions are digitally straight through. The industry allows certain physical paper to come through because we are an expanding business. India still has 60% of the population in rural and semi-rural areas, where technology still has not proliferated. So we continue to get physical, and I do believe it's the right thing to do to drive the financial inclusion. So creating processes using maybe something like, say, ICR, intelligent character recognition. Let me give you an example. So today you write physically in a piece of paper, 200 fields, and then kind of dump it in our branches. And everybody's syntax is different. What is our ability to, instead of doing a data entry, looking and so on and so forth, for the system to automatically read off a scanned image and hence populate my core ERP? Tough job, but we are investing in technologies such as this, which is what I believe the next leg of transformation driven productivity will come through.
Excellent. You've got a very impressive set of shareholders, and many are joining every transaction happening in the market, apart from, of course, GA, some of the most prominent banks and mutual funds, fund managers. When all your stakeholders, along with your board, sit and you do long-term planning for the company going forward, what are the size of opportunity when you paint on a broad scale internally? What kind of targets you've set, which appear to you that all these measures which you're taking or the steps you're taking, one can move towards them in terms of revenues or volumes or even profitability in the next 5 years, say?
We have almost everything that we function is through board constituted committees, and we've been doing so for the past 5 years, even before we went public. For example, we have a committee for business development and strategy. We have a committee for IT and IT-related solutions, something for risk management, so on and so forth. And we have an annual strategy meet, which we just concluded about a month back, and where we created 3-year rolling forecast for the business.
Excellent.
And the one that we created in the previous year, we have already exceeded, and we have
the targets that you had said, you have exceeded that.
We have exceeded that to the extent that we have revised our entire next 3-year rolling forecast.
So what do you forecast? I mean, what kind of strategy? Is it volume, profits, or revenues?
Oh, it's all of it. It's honestly, it's less to do with math still. It's more to do with how do we want to expand the business. I'll tell you why. It's creating a P&L forecast, balance sheet forecast is something that everyone does, and so do we. And we believe that taking the base case of the growth that I've explained to you in terms of how the mature business could grow, the younger businesses could grow, it's reasonably easy to factor where we should be in 3 to 3.5 years from now, probably nearly doubling in terms of where we are today. But we focus more on the qualitative aspects of it all, which is the steps that we are taking to achieve our overall vision. Our vision, Ajay, had been over the past 5 years to create that first fund administrator from India who is globally relevant. I've already called out the top 10 are there, and then probably the next 40 also, no company from India figures in that list.
So in how many years do you think KFIN Tech can figure among the, say, top 10 fund administration companies in the world?
Oh, well, I wish I can give you a number, but I can tell you the journey that we have traversed. 5 years back, we were only here. Today, we have presence in Malaysia, Philippines, Hong Kong, Singapore, and Thailand. Nearly every year, we are adding one single country. We believe in the next 12 to 18 months, we would have started something in Europe and into the US, depending upon where we get the first opportunity. We have been taking a reasonably aggressive stand in terms of buy versus build. Build is some strategy we evaluate. Do we just go build something bottom up organically, or do we buy? If we see a good asset worth buying, we'll start it immediately and get going with that. I do believe that, I don't know about the top 10, but definitely we will be listed amongst the global fund administrators in the next 5 years. I do not necessarily think that just being in 5 countries in Asia equates to being called a global fund administrator. Over the next 5 years, we should be amongst the prominent fund administrators in the world for sure.
Sreekanth, so we are winding up our interaction today, which was a very interesting one. I want to understand Sreekanth Nadella, the Managing Director and CEO of this company. You've got a massive outfit, almost a $1.5 billion company. What is your own style of leadership? You deal with stakeholders, very prominent stakeholders. You deal with a lot of your team members. It's a high-stake industry you are in. What is your personal style of leadership and management? How do you manage your goals, your agenda? How do you manage stress? Tell us about it.
Thank you, Ajay. Stress is not usually a word that I use in my dictionary often, but we are a reasonably small company by revenue and market capitalization in relation to the criticality and the quantum of the work we do. We are identified as a critically important institution by Government of India. We are a quasi-market infrastructure institution. We process millions of transactions for the benefit of the investors. When COVID happened, we were the first responders. All our branches were still open to serve every last person because they needed money to take care of health requirements of their family.
Yeah.
So we are far more critically important institution in respect of the financials that you speak about. Now for me, I believe that beyond the goals that we have in terms of financials and the career, so on and so forth, I believe that we should have a goal, vision, or an aspiration which is tethered to something beyond many of these material items. For example, for me personally, I would always look to see what is it that I'm doing that will benefit our nation.
Excellent.
And a lot of things, and hence this thought even germinated from that like, where is an Indian company in the global fund administration space? Why can't we be that, first bunch of people? So tethering to a goal which is beyond this, I'd like to believe that will significantly help us in the dissatisfaction one tends to see when they do not see a growth for an year or two, because you're constantly looking at short-term goals. Because if your goal is tethered to something big, I believe that these are all just means to an end than an end themselves. I'd like to discuss with my team to the extent possible, and I do believe that we have an excellent team, a lot of vintage people who have stayed with us for a long period of time. My oldest employee has been there in the company for 28 years. Wow. So the philosophy is more to say, look, let us keep a free and open culture, flat structures, open door policies, which is what everyone speaks about, but have a goal beyond what is happening here. And as an organization, we will help you achieve that to the extent we could.
Which is the one business leader you read a lot, you follow a lot, and whose qualities you try to imbibe in your daily life?
Oh, there are so many of them, I think. Probably, I think it's, let me put it this way, I think there are certain traits among certain individuals I try to take as against one person, because I do believe that there's just so much to pick from others.
Or global business leaders.
I think, for example, the vision, something above and beyond, I think, comes from someone like Elon Musk. It's just hard to beat someone like that. If you're thinking about tethering ourselves to maybe national goals, he's someone who's tethering goals beyond humanity itself in terms of what more we could do. But in terms of sheer execution capabilities and the prowesses, maybe someone like Sreekanth Nadella, for example, how the company has moved from where it was about 8-9 years back to where it is today. It's just a massive amount of execution capabilities it could bring to the table.
I'm sure your shareholders will be very happy to know if you can add the same kind of value or that direction the way Sreekanth Nadella did in Microsoft. You guys share the surname. Great, Sreekanth. Great to chat with you. Thank you so much for sharing all your thoughts and inviting us to this wonderful campus of yours.
Thank you so much, Ajay, for being here.
If you like this video, then like, share and subscribe to ET Now.